Hello guys, hope everyone is good. SNT Legendary with another trade breakdown. You see, this is our H1. Our relative high time frame are bullish to this trend line liquidity and this extreme, and we push to the upside, went back, sweep is low, went to the upside. I was expecting the price to check out this trend line liquidity and continue taking this high. Yes. I keep on not learning. I keep on seeing the importance of trading with higher time frame, trading with context to build my case from a relative higher time frame, pro trend to lower time frame, confirmation, time-based manipulation, liquidity. You see, this is M1 internal structure. See, hello, until it took out this H1 major high. You see. I was hoping for, based on this order block, you see, based on this, you see, high, low, high, and you had this sweep. Some people may think it's a break of structure, and we have this inducement, and we have this point of interest, and we have this trend line liquidity. Remember, our higher time frame, relative higher time frame, is bullish. I wanted to sell up here and to take out this trend line liquidity and these equal lows. Akekho. Yeah. Angae. I was hoping to take out these equal lows in this trend line liquidity to this point of interest or this order flow here. This was a counter trend. See, This was during New York Station. See, break of structure. There's equal lows. You had this reaction to the downside. That's a trend line manipulation. Remember, our higher time frame is bullish, and this is our H1 is bullish, and this is our M1 now is bullish, because I was so fixated that seeing this trade playing out, there was no way I would have seen that, because I was so fixated at hunting this liquidity. So I want to ask myself, was this a proper counter trend? Because if I'm taking a counter trend, I need to see a liquidity below, or if this break of structure happened here, then the price went back and mitigate this point of interest before dropping to the upside, taking this downside liquidity and sweeping this low. But it started with this trendline liquidity. People were buying at this point and they were taking out, and they were selling at this point, and the price gave a reaction, sweeping this low. Imagine, because I did mark this one, because I was aware that we had this, see, higher high, higher low, higher high, and with this high low, with this inducement and this sweep. I even told myself that I would buy here to sell here at the top to buy at the bottom. But I didn't even consider entering here, but I did mark it. So yeah, I was not afraid taking this trade, but when it's triggered, I was afraid. This is a good trade, even if it's hit stop loss. Is it really a good trade? Or the reason why it was a good trade is because, you see, I had this point of interest, pushed to the upside, gave a reaction and took out this trendline liquidity and sweep this candle high and push to the downside. You see, I see the sign of weakness. It kept on you see. If it was a pro trend, this high probability of this trade playing out would have increased. But because it was against, remember, from a higher time frame to 1 minute, from relative high time frame to 1 minute, from 1 hour to 1 minute, everything was lining up. H1 was bullish, M1 was bullish, and during New York session, you see, I saw this sign of weakness. The price kept on this sweep and broke structure to the downside, and also continue with the sweep, broke structure to the upside, and continue to the downside. But I was also worried about the price rejecting from the downside. You see, we have this sweep from the downside, we have this sweep. You see the price, but because I was fixated on this playing out, the price kept on taking downside liquidity, pushes to the upside, shows this sign of weakness, pushes to the downside, and sweep this low, taking this liquidity and pushes to the upside. Because it shows the sign of weakness below, it shows the sign of weakness above, but because our high time frame, relative high time frame is bullish, our M1 is bullish, and it's during New York session, you see, and it's time-based manipulation. This sign of weakness to the downside is powerful than this one to the upside. You see that it gave the reaction to okay, it's keep on shows the sign of weakness, rejecting, even rejecting this high, this previous high, and close below, and keep on taking the liquidity and pushes to the downside. What invalidated the probabilistic of this trade was that everything was lining up to the upside. The price has already taken out this structural manipulation, pushes to the downside, and this rejection shows that the price wanna go up, but I thought it wanna take out this liquidity here and continue to the downside. So it's very important not to stay married in a directional bias. So the price kept on pushing to the upside. You see, this week here resulted in the equal highs. I even marked this candlestick that took this previous high. But because I was so fixated in seeing this trade going to the downside, I was blinded by the actual reality that everything, you see, even this sweep pushes to the upside. It shows that the market wants to go to the upside. See? Then what's happened? This happened. See, I was so fixated in seeing this. See, the price just left this trend line liquidity, these equal lows. And what I want to touch on, you see, if you are trading with the context, if you are trading with a relative high time frame, if you are building your case, even trend line liquidity traders would have gotten this one. You see, it's about context, building your case. You see, I want to show you something. I like this one. You see, this is my M15 structure. You see, inducement, trend line liquidity. You see, we are bullish. Inducement, trend line liquidity. If we are zooming in, this is our trend line liquidity. So everything is lining up. See? This is our M5 internal structure on the way to our M1. You see, from this M1 break of structure to this M5 break of structure. You see, this is our Asian range. This is our Smith money trap. You see, price pushes to the upside. If I'm fixated on this trend, you see lower high, lower low, lower high, then the price took out this inducement and pushes to the upside. Then I will wait for a price to also take out this inducement to sell here and continue to the downside and take out this low. But from this M15 bullish trend, this M1, you see, this M1 change of character here pushes to the upside, Asian range, you see, from our relative high time frame M15 to our counter trend M5. Then M1 changes character here, break structure here, pushes to the upside, creating this fake out for SMC. Then Frankfurt opened, manipulated these people, see, then pushes to the upside, breaking the structure. This is no longer M5 inducement. You see, based on this downside structure, this will be our inducement. But because we are bullish, everything is aligning. So I cannot just drop this bullish structure and stay married to this sale here and hope it will go down. You see, everything, this M5 structure is broken. You see, M1 structure, okay, M15 structure is bullish. Then here M5 structure is bullish. Then we have this internal structure M1. You see, everything is lining up. Our M15 structure, first our M15 had to take an inducement in the trendline liquidity. Then our time-based manipulation, which resulted in this change of character on M5. M15 is bullish. First things first, M15 inducement, trendline liquidity, M5 change of character. Now M15 is bullish, M5 is bullish, but our M1, you see, is bearish. See, took out this liquidity, took out this Asian low, Asian high. M5 turned bullish, M1 is bearish, and it took out this trendline liquidity and this inducement, pushes to the upside, break the structure. You see, now M15 is bullish, M5 is bullish, and M1 is bullish, and this is during New York Session time window. You see, price pushes, mitigate this order flow, and you see this move, rapid move to the upside. You see, I consider this a prime setup. I got to see what I needed to see in M15 before I even start looking. Then M5 turned bullish, M1 turned bearish, then broke structure. So everything is aligning. Everything is aligning our structure, everything. Time-based manipulation. This is very, very important. Our prime setup. So if I was taking a sell, let's say at this point, taking a sell to the downside, I won't hold, and I need to manage the trade. So I need to find out, I need to be straight up the counter trends. Yeah, guys, you see, at this point, our trend, this is our trend. This is our counter trend. So counter trend M1 turns bullish, then it becomes our M5, which sweeps the low, then M1 take over. But I insisted. I didn't adapt to the market. I insisted. And the price continued, sweep these lows, continue to the upside, sweep this low, continue to the upside. And the news came. You see, the news came and continued with this M1 structure. Like news affected into the market price, into the price action. You see, context, even traders here, but here, this played out. Context, trading, building a case is very important. So yeah, guys, I don't know. This was a good trade, but I need to open my eyes. You see, this would have been a nice trade because I did notice, but I was so blinded by my bias. .4 stop loss, even this one. Pip stop loss. One is two were being hit nicely, but let's see the potential of high risk to reward. Immediately, okay, I would have taken this one because of this liquidity below, but this one I would have taken it. I need to be honest. $63 divided by 3. You see, next one is 221. I hope guys you enjoy this trade. Cheers.